when we came up with an idea of Magnati, like with every idea, many people thought that it's a crazy idea. It was not worth it. You can't take away a business out of a very long-standing bank and be nimble and agile and so on.
You can be big, but all of these are taking away from what I might say what could be significantly profitable chunky bits. Let me add another challenge to that. One of the issues which we don't think we have solved for very well is cross-border payment. So joining me on the couch is Ramana Kumar. Ramana is the CEO of Magnati.
A lot of open banking discussion then evolved into embedded finance, right? We all thought banks are going to open up, let everyone come in, start issuing. Anybody can issue a bank account, anybody can issue a bank card and so on. The economies are moving into a model with the digital technology available today, more of a bilateral trades. And when you do a bilateral trades, they want to do it in a currency or a tool that's comfortable for both of them. I think CBDCs are going to solve a lot of those problems.
What happens to smaller banks? How do they cut a niche? Ladies and gentlemen, welcome to the 100th episode of Couchonomics with Arjun. It feels like a joke sometimes. A journey which started as an experiment, which was supposed to be about 12 episodes, is now on the 100th. Joining me back on the couch is someone who was actually there at the beginning of the journey. If I'm not wrong, it was the third episode of season 1, which was over 3 years ago. So joining me on the couch, it is the same couch, although we have bought a new, we bought a new couch, it's the same version, is Ramana Kumar. Ramana is the CEO of Magnati. Welcome, Ramana.
Thank you so much, Arjun. And, it feels amazing that when you discussed with me 3 years ago, a small idea, today is an institution in itself. And I think
that's very kind of you. Institution.
It is an institution in itself. And I suggested you when you did your season 1, you should go to Netflix and sell them the whole season after season.
Well, let's see if Netflix is listening. Maybe I'll get a call.
Of course they will listen.
Maybe I'll get a call tomorrow.
No, for sure. I think I'm pretty thrilled to be here, and thank you for inviting me on the 100th episode. I feel pretty honored to be here.
No, thank you.
One thing that changed are these mics. They were not there on the third episode.
No, they weren't. And actually, we were in the same studio, but our studio was not as grand.
Exactly.
And I'll share some of the pictures of the third episode when it happened with you. Ramana, lots transpired in the last 3 years, right? And although we frequently keep in touch, we meet each other more often than I guess maybe our spouses meet us, right? In a perverse manner. Let me start with, I guess, the obvious question, right? 3 years ago, Magnati was in its infancy.
Right.
I think you were about 12 months to 18 months down the line. Now you are nearly 5 years down the line. Lots has happened in the last 3 years. So for the viewers, it'd be great if you can start there, paint a picture, how you've come along on your journey. Where are you on that?
Absolutely. Thank you, Arjun. I think, the largest credit of idea of Magnati also goes to you. If you remember when you were the client and, you were pushing us to do all the innovation, what we did today, which is now the core IP or the strengths of Magnati. So, you have a considerable hand in what we have shaped.
Thank you.
These 4 or 5 years for me are the learning into 10x. So, when we came up with an idea of Magnati, like with every idea, many people thought that it's a crazy idea. It was not worth it, and so on and so forth. You can't, for example, you can't take away a business out of a very long-standing bank and be nimble and agile and so on. And what we have done in these 4 or 5 years, to be honest, is if I go back and rewrite the story, I wouldn't change even a single page. The way we formed the team, and today that team is the core, and from a very small team to about 350, 400 people is an amazing story, right? That's number one. Number two, retaining them, these are creme de la creme of the market, and retaining them is another great achievement. More than that, the way we carved out from a bank and formed the cloud-based payments company, which is another great story for us. And again, we did it with relatively very less capex compared to how much banks spend on moving to a cloud. And we did it pretty fast compared to others who would have done in the market. So one thank God, it's a great story. Thank God for this experience. And the way we have turned around and we have created the market share, and today the way we have delivered valuation for our investors, I think is a fantastic story as well. So all in all, everything touch would work pretty well.
No, it has been very impressive. So you're right. I think the team. Obviously, I was on the other side, gave them a fairly hard time. They're still all there, or at least the majority of them are still all there. I think you guys did go technology first. I think you were the first in the market who convinced us that an ecosystem approach could be delivered. And that was basically that you could build products on top of basic payment acceptance 100%. And acquiring, whether it's offline and online. And then, that allowed new user journeys to come through, right, which itself is quite fascinating. And then, you guys have figured out, and we'll talk a little bit more in terms of the multiple monetization channels that you've created. So this is now not just a single trick pony in terms of what is my acceptance fees and stuff. But let me pose a question, right? So everywhere in the world, right, we see a powerhouse.
That's right.
Right? And again, no names to be thrown around, but examples like Stripe, operates across multiple jurisdictions, multiple markets. Arjun, their name.
One of your sponsors.
They've stayed with me from the day one. They've been here. They're a global phenomena. You go eastwards, there are players that have come out of Southeast Asia and Asia Pac. What will it take to create a powerhouse out of the Middle East which operates in more than 2 countries or 3 countries?
If you look at payments as a business, and not just payments, I think overall financial services, and we are seeing it in other industries as well. There's a lot of, last time I used the word, we are in the era of conundrum. We are exactly in the era of conundrum, 4 years later too, where a part of it is driving nationalism and a part of it is driving globalism, right? So payment technologies have all gone nationalistic. So there's a major nationalistic push. At the same time, the corporates and the companies working on have become very global. So they want the best what is available globally, at the same time with a lot of local flavor. So clearly there is a need for Middle East and Africa based payments company, which is in line with the names you have mentioned. And there is clearly a potential opportunity for that. And, not only that, it is also about having the flexibility of customizing your local partners. So a McDonald's is not a McDonald's here. There is a lot of local flavor. Similarly, you and I have been through the IKEA stories, the Ace stories, and there are many others which brands are not exactly the global brands, but there are a lot of local customization needed. Now that's on the corporate side. Then you have FIs and financial institutions requirements are changing. Every country has a different requirement of card, not just card, alternate payments, tokenizations, and the bigger brother in the picture is a regulator and schemes. They are changing quite. The number of updates we have seen from the schemes, the number of updates we have seen from the regulators. I think there's whole capex allocated for those projects, the way the things are changing. So going back to your point, yes, there is clearly a need for a large Middle East, a large payment company that represents Middle East and wider Africa. And at the same time, which there is a super opportunity for customizing locally at the same time under that umbrella.
Okay, so let me pick on that bit, right? I think, and maybe the answer is what you are, but let me pose the question and then you could sort of say, I just answered it, right? The payments landscape for me is, I love the word conundrum, right? Call it conundrum, call it chaos, call it lots of changes, right? So there's lack of regulatory harmonization across this, if I may say, macro region, which goes, let's take MENA, but also Central Asia, which is quite interesting, right? Then you have the rise of the public good, the public payment infrastructures, right? We have Al Ittihad here, we have Saudi payments in Saudi and others which are working on it. Form factors have evolved, right? This is, some places there's card-based payments, others like account-to-account payments, debit, credit, pay by link, pay by something or the other, biometrics, contactless. And then there is tremendous convergence between payments and other products. BNPL is a great example, right? Half the world sees it as a payment product, the other half sees it as a lending product. Most of us see it as something else, right? So with all of that going on, how do you maintain profitable growth? And that's the question, right? You can be big, but all of these are taking away from what I might say what could be significantly profitable, chunky bits. Let me add another challenge to that. One of the issues which we don't think we have solved for very well is cross-border payments, not remittances.
That's right.
Corporate payments and stuff like that, which is, I don't know, 10x, 15x of the normal sort of payments category. Put all of that in the mix. What does the payment company of the future look like?
Absolutely. So I think if we go back and look at payments company, I don't think payments company will be called payments company in future, right? And that future is when we'll all talk about it. Payment companies today have evolved, and remember, if you remember, when we started Magnati, we always said we are a platform. We are a payment as a platform. That's the whole approach. And while many people called it payment as a service, we always said payment as a platform. Now let us take a step back and look at what's happening with big tech companies, the Googles of the world, the Microsofts of the world, the Apples of the world. Everyone is suddenly have moved away from services, started looking at platforms. OpenAI is just an example, right? Now, you look at what Meta is doing with the Meta glasses and convergence of AR and AI. Now, what is this all leading up to? It all leads up to how many people come into my platform. That's all the game of platform. How many people will come in, what sort of data I have. And that's how the big techs are transforming. And I don't see why payment companies would not go that way. If I have to write a hypothesis, payment companies have to go into a platform-based model, and that platform would make them move away from calling themselves a payment companies and more of enablers of platform. And in that enablers of platform, embedded finance is a first step. But I would say anything that passes through my toll gate, right? So whether you call it a payment, whether you call it a token, whether you call it cross-border payment, whether you call it stable coins, whether you call it crypto, whenever they get accepted or whenever they get scaled up, it is immaterial because you are a platform that passes electronic token, whichever is the token, whichever is the color of the token, whichever is in the right regulatory and AML and other regulations. I think payment companies of future would be that. Now that's what I call the basic services, what gets transformed into. Now on top of it comes the enablement of finance. So today, as we speak, we have launched the real-time merchant lending, and we have signed with many banks, and fingers crossed, the amount of interest we are seeing from other banks is amazing, because they see the value of getting this real-time data, and on top of it add the 3 parameters we always talked about. How is the merchant performing in terms of the transaction velocity, and how in real time you are predicting the troughs and the spikes, and saying what are the chances the merchant may run away, or what are the chances the merchant may go bad or good, by the way, both sides. And that insights today only we know as an acquirer, because all banks would know is by the time the merchant runs away, you'll end up seeing empty offices. These are the data insights we are plowing into this lending model that drives the growth of that. So lending is just an example. So this entire finance enablement. Now finance is just one step. Tomorrow there may be a lot more that comes in and sits on this platform, right? And financial services is just a starting point. And there is many more life cycle. So we're now talking about, how many gadgets do you wear to measure your fitness, right? Not even fitness, your health metrics. Now, how do you connect health, finance, and beauty, as an example? Many other things are going to come onto this, what we call the embedded lifestyle platforms in future.
Okay. So now let me take your first point. Let me take your second point and then pose it. So you talked about localization, right? You've not talked about platforms.
Yeah.
One of the biggest challenges platforms have, let me take a step back on that. What you really summed up for me is that the game is of data.
That's right.
Right? Data, unfortunately or fortunately, is becoming a national agenda topic.
100%.
And most of it is about local residency.
That's right.
Right? And platforms operate best when they're on the cloud.
Yeah.
Data residency sort of creates a challenge of being truly on public cloud, right? So you need to localize your platform to each market. Forget the expensive side of it. Let me just pose a simple question. How do you take a business that has grown and established itself in the UAE, right, which arguably has certain different dynamics, to Saudi Arabia, right? So what would it take to be successful with a very similar sort of journey, which is a payment company becoming a platform company in Saudi Arabia?
Yeah. So I think if you look at the dynamics, the data can be split into many parts. One, which is an absolute privacy or private information. And the best part of being a payment company is you never collect the privacy information. The second part of it is you get the transaction information. Now, inside that transaction information, there are proprietary information around card number, card CVV, etc., XYZ. You don't need to still do that. There is no need of that. The next part of it is a behavioral pattern. Now, behavioral pattern linked to a token. Now, Arjun and Arjun's mobile number and Arjun's card number and Arjun's email ID are Arjun's proprietary. But if we assign a token called 1 to Arjun, we don't know Arjun, but we assign a token called 1 and build a behavioral patterns around 1 is a great way of using that information into developing a lot many insights and a lot many with AI tools, a lot more customized, personalized options for you, right? Now, that is where the power comes of the platform. Now, the platform will assemble the data which is non-proprietary but more behavioralized that you can use and build this products and solutions on top of it. Now, once you build that solution, how do you offer it back to the customer is back to the partnership model. And that's why I say, countries like UAE, countries like Saudi, more so in KSA, is the need for the right partners, is the need for approaching it through right partnership and right ownership, and ensuring that you build very localized model, but learning from a behavioral pattern or behavioral model that existed in, let's say, what we built in the UAE. The models can be copied, data need not be copied. Data can still be localized, but model can work on top of it. Now back to the big techs. Now these are all financial data or a transactional data. Now big techs own a lot more information than that, right? Now let's go back, let's say for example, a Uber or a Careem. Uber or Careem owns what you call the traveling salesman data. They exactly know how you are moving from different places, and that holds a very different information, which is only available, let's say, for Uber. Then your Facebooks and Instagrams of the world own much more information about your preferences of which videos you watch, which reels you watch, and so on and so forth. All this information combined through passing a token that communicates and connects this is the way platforms would be built for future.
Okay, and I specifically, if I go back and focus on KSA, you mentioned local partnerships. What else will it take for a newcomer entering KSA to be able to make a dent in terms of taking share away from the incumbents?
Yeah, I mean, I won't call it taking share away from the incumbent. To be honest, KSA market there is so much more to be sincere, right? If you look at UAE has always been a carded market and has grown considerably. There's a lot of push from government and others to move to cashless, and we have seen the growth of it, and at the same time the incentives given by the banks as well as the interchange. It's always the question about which comes first. Has helped a lot in acceptance. Saudi is going that way. Saudi started with a powerful push of Mada. So you still see a lot of transactions going through Mada rails and going through cash still. But there are machines which are mandatory now. If you open a business, you need to have a machine in there. Now, the market is going to be so big once the credit card proliferation happens, and as well as prepaid cards, payroll cards. Payroll card is another great opportunity. And as we go along that market, Arjun, everybody has a piece to take. Now, back to the point we always talk about, right? The commercialization and the EBITDA journey. And how easy it is and how difficult it is in Saudi is your EBITDA comes from scale. And in Saudi, you can only get scale through right partnerships and right presence of creating that local presence. And you are there and people see you as local partner, and that's how you grow your business. Hence, Saudi is a great market, but you need to be customizing yourself to be in that market to get the local flavor, and you gain the market share.
No, I agree with you on that. I agree. Let me switch topics. There's another hot topic we guys talk a lot about, which actually is quite interesting, which is everything to do with embedded finance.
That's
and
right.
I think the reason I actually particularly like embedded finance is, while everything that we ever have talked about is taking people out of the equations or between two people, embedded finance actually brings more people into the equation, right? So you have the consumer or the customer at the end, could be a small business or a large business. There is obviously the embedder, which could be anybody from a financial institution to a retailer. You then have, I guess, fintechs of some sort or the other, right? You then have incumbent players. It could be a large payment player, could be a bank, could be
Absolutely.
an NBFI. And possibly some sort of technology platform to add to it, right? Whether it's people providing cloud or so on and so forth. I'm going to make a couple of statements. They might be provocative in statement, right? So first statement: yes, we've seen a lot of embedded payments, courtesy Apple Pay.
That's right.
Samsung Pay, tick in the box, heading in the right direction. When was the last time I pulled a card out of my pocket? I don't remember. We saw BNPL, great poster child, naughty poster child for BNPL, for embedded finance. Did pretty well in our sectors. We've got two unicorns and quite a few. We're seeing now all kinds of variants come into the market, right? And then it kind of sort of fizzles away, right? In the sense, there's a use case there, there's a use case here. Some of the people in the ECR business tried to do point of sale financing for merchants and so on and so forth. And but no real scale. Nobody's kind of changed. So what's your take on, is embedded finance going to truly re-architect the financial system, which is what it promised?
That's right.
If it will, what is it going to take more than what's already in the game?
Right.
Or is it not?
So a lot of people, at least in my experience, a lot of open banking discussion then evolved into embedded finance, right? We all thought, banks are going to open up, let everyone come in, start issuing. Anybody can issue a bank account, anybody can issue a bank card, and so on. And then we did realize that there were a lot of benefits. We have seen successful countries like India doing amazing embedded finance models, and then there are also certain challenges and roadblocks. Now, payment aggregation, account aggregation, by BNPL, and then I agree with you, it then fizzles out. Now, what is happening is, at the same time, if you look at what's happening in the wider tech world, is people did metaverse and then realized, oh no, why? Because there's this huge hardware needed to put around your eyes, and is it really going to work, and so on and so forth. And look at the learnings. Meta then moved into a very slim glasses now. Now, what I'm foreseeing next, and this is something I personally think we should work on, is what I call, and I spoke about it in many forums, is when I'm walking in and I'm wearing these normal glasses, many times I look at this phone and say, should I ask Arjun what phone he's having, or what is this? It looks nice. Now you ask Meta, what am I looking at, right? And Meta says, oh, that's a Apple phone or a Samsung phone. By the way, it's available for X at Amazon. Now, you see suddenly AR, which is the hardware and what you're seeing, now getting involved with your AI tools, which are the bots, suddenly opening up a lot of your transaction behavior. Okay, so the AI bot is telling you the best place to buy is, let's say, Amazon or Noon. The best way to buy is with your Emirates NBD Fab, whichever card. And by the way, currently there are 3 offers running. Where do you want to procure it from, and so on. Now, those interactions is where the incumbent players are now going to be not part of that as we evolve, right? As we evolve, they're not part of that. And when they evolve, when they're not part of that, they have no other option. But when some people says, oh, by the way, the best offer is on Emirates NBD card or Fab card, or you don't have it, but they're running a campaign, when you apply through this app, you'll be able to get it. Or just say open or apply for a Fab card, and then the application goes through. That's how you embed into this new tools of AR, AI bots helping you get into the model of embedded finance, right? It looks like a sci-fi movie.
No, it doesn't.
but
Actually, it makes perfect sense. But the question I'm going to ask is, and again, I'm not putting you on the spot, but have the regulators figured out how this incredibly complex journey, right, of customer ownership, movement of fairly sensitive customer data, right, is all going to be done in a compliant and regulated manner? Because I think, open banking is a great idea. Banks have resisted it largely because they see it as a zero-sum game right now, and I can see some reasons for why they feel that way. Fintechs have now realized that they need banks more than they ever did before, which is great, and we've had several conversations on that, so we won't waste any more time on that one. But my question here is that the last word, in my humble opinion, sits with the regulator in all of this, and maybe multiple regulators, and that's the complexity, right? Sometimes because a telco is regulated under a telecom regulator, a bank under a financial regulator, and somebody else under a third regulator. So this intra-regulatory alignment. How does it happen, right?
Yeah. And it's not just intra-regulator; it's going to be international. So if you listen to Mark Zuckerberg's story around creating artificial digital networks, right? Now, what it means is today, if you're an influencer, and he gave an amazing example, which I think it immediately relates to you. For example, Arjun, Couchonomics, right? Arjun only has so many hours to create so many episodes of Couchonomics. Now imagine Arjun creates 4 bots, exactly saying one bot focuses on financial services, the other bot focuses on insurance, the other one focuses on fintech, and by itself they are creating the content, right? Now, so what it really means is you are now creating what we call the digital twins of yourself, and they are enabling and interacting with other digital twins to create an ecosystem. Now, who would you govern if you are a regulator? Do you govern Arjun, or do you regulate Arjun, or do you regulate Arjun twin 1, twin 2, twin 3, twin 4, right? And this is bound to happen because look at the content that was created on Instagram Reels, or TikTok for that matter, 3-4 years ago to now.
Yeah,
it's phenomenal.
Phenomenal.
And people are earning money on creating the content. Now, how much content can I create? Today, I am stopped by number of hours I have. Now, I create 10 bots that creates 10x content, and there are people who are willing to go through that content and watch it. Then you make your money. So it can be Couchonomics twin 1, twin 2, twin 3 in future.
Maybe we're working on it. That's a secret we'll keep to ourselves. But I'm going to put you on the spot. Nick, give me 2 or 3 immediate use cases for embedded finance that you see flying.
I think merchant lending, we have seen phenomenal growth of it, and we will see that, because imagine if you're a small bank or a large bank, it doesn't matter. You come onto the platform, and now suddenly the merchant now has an option to push their data through consent and can select which bank responds faster to get the lending from them. And not just bank. There are finance companies today who are talking to us. There are different companies, international companies who wants to come into the market and think lending is the easiest option of coming in because they have the balance sheet, they're sitting on capital. That clearly I see as one of the largest area that will move into. The other one are which I see, which is part of the embedded finance and wider platform story, are the wallets moving into a large wallet players. And when I say wallet now, I'm going to open up a box, not putting in my traditional banking cap on, and say wallets with currencies and digital currencies and stable coins in future. That stable coin ecosystem integrating seamlessly into the current banking and financial rails is something we would see very, very soon. And those rails are coming, and they're already there. I think.
Do you think they'll just become digital banks of some sort?
There will be. There will be. So
my question is: aren't all wallets either? If they're financial super wallets, they're all heading towards some form of a digital bank, because sooner or later they'll have to get that level of regulation. If they're non-financial, platforms, in your word, they become these sort of super app type things where financial services is embedded.
Now the question is, what do you call digital bank, right? Is digital bank going to be the bank that holds your... No. Is digital bank going to be the bank that holds your traditional fiat currency? Or is a digital bank that holds your stable coins in future, or maybe cryptos in future, right? The whole definition of digital bank may change, right? So who knows? There may be a crypto bank in future.
Well, there's a programmable bank which is coming.
There's a programmable bank. I saw the episode. I think it's very interesting.
Georgia, which is coming up. Right. You bring us to an interesting part in the discussion. About a few weeks ago, we heard Revolut is going to enter the market. I think primarily initially just as from a PSP sort of license, if I'm not wrong, right? Which is kind of their playbook, isn't it? They do remittances, they do prepaid cards, and that's kind of where you go with. I'm sure you have an opinion. I wrote a piece about what I felt this would do for the market. What's your view on the
It's an amazing story. I think full credit to central bank.
Right.
When central bank came up with payment regulations and came up with the RPS and SVF story, it was a complete shift of how UAE is perceived today now. The way the number of international players are coming in and looking at RPS and SVF as a license is a great story. I think this is how you bring the best players into the market and challenge the incumbents, right? Now, when the best players come and, Arjun came into the market and Stripe came into the market, we were the incumbents, and we pulled ourselves up and started, fighting because there is only so much lunch or dinner left on the table, right? Mm-hmm. So it is a great thing for the market, and for the consumers, it's a right thing because they now have a plethora of choices. Now, having said that, I just hope that it doesn't just become a pricing game and it becomes more of value-added game and takes the market up in terms of value. Because irrespective of how many new players come in or how big players come in, if you end up playing a pricing strategy, I think that's the end of the story, right? Because innovation breeds innovation, and if you need innovation and need right capex, you need to have a profitable revenue generating EBITDA stories for people to invest in the business and grow. So for me, that's only. Otherwise, that's the best thing to happen for the market. Imagine more the players, the more the market grows, and new players come in, which means the new people coming into the country, population grows, and the growth happens.
Okay, so I'm going to ask you to just step out of your pay tech expert hat and go back to your banking days, which I'm sure are not that far in the past that you've forgotten, right? We're going to add a new breed of competition that's coming in, right? Whether it's homegrown competition, and you'll see some of these smaller, more agile wallets / neobanks / digital banks. We're also seeing some international players coming in for either right or the wrong reasons. We can debate out of it. What starts to happen to what I call tier 2, tier 3 banks, right? There's no shortage of banks. Right. In the UAE. I've forgotten the number. It's gone into multiple dozens, right? What happens to smaller banks? How do they cut a niche? Do they all go digital first and start playing that game? What happens with these players?
I think, I'll put my, before I put my view, I'll actually talk with my interactions of, some of these smaller banks who have new CEOs, and I know them quite well, right? Mm-hmm. And if you talk to them, there's a lot of fresh energy, fresh ideas they're talking about. Rather than saying, it doesn't matter whether small or big, when you focus on few themes like, and when you come onto a platform like the lending platform I'm talking about, you come onto the platform, it doesn't matter what is the size of it. It's all about your agility to underwrite and your agility to get this information, digest it faster and underwrite. So clearly some of the smaller banks have much larger edge in writing those right credits. Mm-hmm. And their ideas and their thinking, especially at least the CEOs I've interacted with, is next level. And they're really thinking about how do we position this in a different way than conventionally building a bank. Mm-hmm. And, There are some fantastic ideas, and they're all their proprietary ideas. I don't want to talk about some of them, but clearly it is the right thing that is happening in this market.
So you're saying niche, more targeted, specific spikes you focus on, and then you become specialized.
You become specialized, right? Absolutely.
Let me ask you a specialty scheme which is coming, and I'm going to keep you in that sort of uncomfortable banking space, right? So we've seen a couple of community banks come up, right? Now the concept of community banks globally is very well known. Here, I think it's a new concept. Community banks typically sort of target what I call the underserved segment. And underserved doesn't mean unbanked, it's just underserved. Yeah. And they could be SMEs, or they could be micro, small businesses, or they could be individuals. And they bring a sort of slightly different flavor, right?
That's right.
It is for profit, but it's not only for profit. Do you really see in a country as small as the UAE with, 8 to 10 million people, fairly transient population with the expats, the concept of community banks really flourishing?
So Arjun, if you look at Magnati itself, the biggest success story of Magnati is what we call the direct issuing, which used to be Ratibi plus wallet services. We have the largest Ratibi blue collar, for the sake of discussion. Ratibi is like the WPS and the blue collar worker base. That market has transformed. For like good 10 years, what we used to see as people standing in line and withdrawing money the day they get the salaries, to now people using transactions at POS, is a great story. And it's evolving and it's moving forward. What it means is this underserved segment really needs a particular service provider to service to them. Not just salary, but also some basic services, right? I mean, in my last 8-9 months, I've interacted with people starting with a very non-profit services to more of a very profit-centric, but providing those sort of services like early wage service providers. Then there are providers who will underwrite them for a payday loans. Then there are providers who would give the insurance, and it's also very encouraging to see some of the counselors of these countries where they come from talking to us and saying, how do we incorporate insurance so that their family gets something if something happens to them? So there are a lot of potential requirements for such segment. Would that require a bank? Would that require a service provider? Clearly, the markets would say, in my opinion, it does require a digital provider, whichever way, whether it's a wallet, whether it's a bank. But not a very traditional walking into a branch sort of service, but very unconventional, but connecting the segment. So, for example, today, if I am a bankable customer for a bank, they provide me services surrounding me. Whereas if you are underserved, you provide services surrounding me and my family where I come from. So that's how you connect the channels and connect the services. So you go back and find partners who offer both sides of the pyramid. That's how you make yourself more profitable.
Yeah. So last part of the conversation today, right? It's an incomplete conversation we had a few weeks ago. Take digital currencies, right? Yeah. Which kind of preoccupies most of our ink these days, right? I think there's more ink thrown in that direction than one can conceive. I'll split digital currencies in my simple format. There's the classical crypto, the world of
digital assets. Call them digital assets. I won't call them digital currencies.
Let's talk digital currencies. I'll take the crypto, which is the bitcoins of the world. Let's put that aside. Not a conversation. There are two other forms of digital currencies which actually interest me. One is CBDC.
Yes.
Both in terms of wholesale and retail, and I'll come to it. And then third part is everything to do with what I call well-regulated, well-backed stablecoins, right? Yeah. And I use the word well and well again and again, right? And as a matter of fact, it's very interesting because I had a very interesting conversation with the Chief Fintech Officer of Singapore, Swapnendra Mohanty, on this very specific topic, which will be airing at the same time as your episode. So it's very interesting to see if you guys have different opinions, right? Let's talk about CBDCs first, right? First question, wholesale and retail. Personal opinion, wholesale, great use cases, solves for cross-border payments.
Absolutely.
Introduces retail, personal opinion, answer looking for a problem.
Yeah.
What's your view?
No, 100%. I'm with you. CBDCs would solve a lot of cross-border, but also solves a lot of bilateral trades, right? I think that's the whole purpose. In my view, why the way the world is changing, and I promise I'm not going to talk about any political or whatever. The way world is changing, there are the economies are moving into a model with the digital technology available today, more of a bilateral trades. And when you do a bilateral trades, they want to do it in a currency or a tool that's comfortable for both of them. Mm-hmm. I think CBDCs are going to solve a lot of those problems, right? Not much on the retail, in my humble opinion. But then again, because they are regulated by central banks, there will be the early adopters who would move a part of their balances in an account into digital CBDCs, not digital CBDCs, and may actually start using them as
and there might be some specific use case for the government here and there. There might be some specific use cases, right? Let's talk about stablecoin. What's your view on stablecoins, and where does that fit into the overall equation?
I think tremendous opportunity. So now I'll put my transaction banking cap on, and I'll put my traditional bank cap. I am a very strong risk-rated organization, corporate. I have a lot of supply chain across, and I want the supply chain to play on my credit arbitrage as well, as a simple example. And I'm just taking a hypothetical case. So now the corporates, so far, there are banks that have gone in and started issuing guarantees and other tools. Now the market will slowly see, Arjun, and this is my hypothesis, of alternate players to banks coming in and starting to issue stable coins. I mean, I think we have the circles and the tethers, which are very successful case studies. But in my view, we will see many AED X, AED Y, or USD X and Y stories coming in very soon. And when they come in, there will be, of course, a payment token issuer at the back end. So, central bank have come up with amazing regulations around payment token issuance, payment token issuers. And many of these large entities may also go and get the payment token licenses. So we'll slowly see large corporates going into stable coins and start issuing coins of their own in future, which will predominantly again solve a lot of their trade flows. But if you also have a very strong retail network, you can actually start back to the good old days loyalty programs. You can actually start encouraging retail customers to start using the coins within your stable coins within your framework. But the largest value would come in trade barriers and what we call deep tier supply chain.
Interesting. Ramana, last question. I know I'm out of time. We're on our 200th episode. 3 years later, you're still back on the couch. Hopefully it'll be a different couch. What are the 3 things you'll see different? What are the 3 things which will be completely different?
Yeah, I think in 3 years I'll have a humorous answer. Maybe my bot will be talking to you. Your bot.
That's a scary thought, but yes, quite possible. Quite possible at the speed at which we're adopting.
Exactly. And by the way, your 200th episode may come in a month. Who knows, right?
Who knows? There you go. Right. So I've got 4 avatars now.
Exactly. Right. So, and then the more practically, I think stablecoins will have much larger role to play as we move on.
As a part of the overall economy?
As a part of overall economy.
Okay.
And second, these are all my personal hypotheses, not as CEO of Magnati, so I want to be very clear.
Yeah, sure.
The second part of the story is you will see more tokens encompassing not just cards, but your overall credibility as a customer. And that credibility would either be backed up by a financial institution. Today, like an issuer backs up your credit on the card. There may be somebody who would come in with all these open banking or embedded finance models that can guarantee your credibility based on the multiple relationships you have, right? Whoever can aggregate that and can take the token. That can be something depending on how soon your 20th, 200th episode come in. And the third one I'm seeing is deep nationalization coming back in, and a very very selective but very focused partnerships happening between these nationalistic payment schemes, right? So, like we have seen in the CBDC framework, how India, UAE have come together. Similarly, we will see the nationalistic. We are also seeing NPCI helping Al-Ittihad payments and building it. Those sort of partnerships would evolve and would take care of a lot of trade happening between the two countries.
So you're completely and wholeheartedly committed to the digital assets revolution that we're undergoing.
Absolutely. I won't call it crypto, but digital assets.
Digital assets, which is totally. Ramana, thanks a lot.
Thank you, Arjun. Thank you so much. I really, 100 for me is very emotional, and I'm so happy how much Couchonomics has become an institution again. And I hope it'll go 10x faster and
with my bots, I'm sure it'll go 10x faster. I don't know if I have enough energy to do another season.
Create a digital twin.
But let's enjoy. No, I appreciate you coming in, and thanks a lot.
Thank you
as always, ladies and gentlemen. That was Ramana Kumar, who's now completely committed to the digital assets revolution. So this is not just the first person I've met, but quite a few people who believe that the future is about digital assets. I should have also mentioned that Magnati, in all intents and purposes, is a unicorn, right? And if I'm not wrong, the first unicorn we had in the UAE, or if not the first, definitely in the first few. So with that, I'll say goodbye. I'll see you next week. Bye-bye.